go into finishing the return, tab K. So we've gotten our payments and our refundable credits on there. So now we're just wrapping up the tax return. We have all the information in. You know, you're able to go back and look over the tax return, making sure you haven't forgotten any information, going back over the intake form, the 13614C, making sure you haven't forgot anything. So now you're at the point, does the taxpayer, do they have a refund? Do they have a balance due? There may be a few returns that we're filing, maybe they just broke even on there. So on that page 3 of the intake sheet, they do indicate if they get a refund, do they want a direct deposit? Do they want a paper check? Do they want to purchase savings bonds? They can split their refund up into multiple accounts. They can have go into an account as well as receiving a paper check. If they have a balance due, how do they want to take care of the balance due? Do they want to provide us with their bank information and have us to transmit it to the IRS so the IRS can pull it out of their account? Do they want to mail the IRS a paper check or go on the irs.gov website to take care of that? This is where we're finalizing the tax return. With the client, you're going to input all of this information into TaxSlayer, and then you're going to go and seek a veteran volunteer or a site coordinator and have us to review the tax return. We're going to look over it, and then we're going to go over it with the tax client so we can get their signature before we e-file the tax return. So refund or overpayment, these are payments may exceed the amount of tax liability. The amount of the overpayment is shown on the applicable line in the refund section of the Form 1040. A balance due means their tax liability exceeds the payments made. The amount due owed appears in the amount you owe section of the Form 1040. This is the amount the taxpayer must pay to the IRS. And don't be afraid to tell individuals that they owe. On there, after, you know, you kind of see a couple of, I think now TaxSlayer has changed it. It used to be kind of red to show a balance due. I think it's just black with a negative sign. There are people that have to pay. Everybody does not get a refund on there. Some people will still assume that maybe they get a refund and pay at the same time. It doesn't work that way. You either get a refund or you have an amount due or you're breaking even. You'll probably start out when you come and you're seeing that, oh, a person owes, did I input something wrong? Did I do something wrong? We're going to come and check it. And if we need to make adjustments, we'll talk about it. I'll tell you like, hey, oh, just forget, make sure you add this there. Or, you know, if it's not, like, no, it's good. And we're going to tell the person they owe and why they owe. Maybe they did not have enough federal taxes withheld, any taxes withheld, which goes into maybe they made some adjustments on their W-4, or it's a self-employed individual and they didn't pay in anything on there. Maybe a dependent came off of their tax return. It could be any type of life change on there where they would owe, and we would explain that to them so hopefully they can be prepared for the next filing season so they won't see it again. And then you'll get to the point where you'll be comfortable and you'll tell somebody they owe. Yes?
You don't do the payment there, do you? Like, or they take that home and do it? Or?
No, so if they have a balance due and they want us to facilitate, then yes. They will have the only way we can help with the balance due is if they bring a check or they pull up their mobile banking information, then we can put in their bank routing account number. And we're not doing it, we're just transmitting it to the IRS, and the IRS takes the payment. So these are some options for a refund or overpayment. We've talked about they can apply any portion of their overpayment to the following tax year. So that then makes the next year that it becomes an estimated tax payment. They can receive all or part of their refund using direct deposit. They can select up to 3 accounts. And as people are coming in, we do not deposit their refund in other people's accounts. Like we'll have maybe friends or family members come, or even it could be like a mother and a son. And we will tell them, hey, you put this account into your child's information, the IRS could freeze that account. They could freeze that refund on there. So it has to be, that person's name needs to be listed on that bank account in order for us to use that direct deposit, the routing account information on there. They can receive all or part of their refund as a check. or they can purchase some savings bonds. Now, people with refunds, we want to make a note on here. A person's refund can be reduced if state tax, child support, federal debts, right now not student loans, are owed. So even though a person has a refund, if they have, maybe they were from in another state, say Oklahoma, they have state taxes, and they have not paid them, they have a refund of $1,000, we're putting in their bank information for it to get transmitted. Once the IRS accepts the refund and process it, Oklahoma has talked to the IRS or their treasury where they handle these payments, and that person's refund could be reduced or taken all the way to satisfy a state debt, tax debt. We don't know that, but when they go to the irs.gov website and go to where's my refund and input their information, it's going to let them know that it has been offset. So they'll be asking us what happened. Go and check the status of it on the where's my refund on the irs.gov. They need to select what year. Now they can select up to 3 years. The most current 3 years, they put in their social, the taxpayer social, their filing status, and what is the refund amount that was listed on the tax return. It can also be offset for child support. It can also be offset for federal debt. So maybe someone owed on their 2021 tax return. They haven't made any type of payment arrangements, or even if they make payment arrangements, they have a refund on their 2022 tax return. It goes to satisfy that debt first. So even if a person makes a payment plan for previous years, they have a refund, the refund goes to those previous years. It's just gonna help them pay off that payment plan sooner. Again, student loans are paused. So all government student loans, they would not be offset unless, again, it was probably through a private company. This could also be maybe somebody unemployment. If somebody received more unemployment than what they should have, it could be offset. Maybe somebody's Social Security benefits. So pretty much anything governmental, a refund can be offset. So these agencies, they do communicate for any of those debts. Balance dues. How can someone take care of their balance due? They can do a check or money order. That tax return is going to print out. We give everyone a copy, even though we try to submit the return electronically. It's going to print out all balance due returns, print out a form 1040B, the payment voucher, so they can do a check or money order with that form. That 1040B voucher, it includes the taxpayer and spouse, the taxpayer's name. It's going to have their address, the amount due, and it also provides where they can go and mail that payment to. They want to try to pay as much as they can by April 18th. You'll see 17th, but it's actually April 18th that they want to pay as much as they can by that due date. Electronic funds withdrawal, that's where we're able to help them. If they provide us with their bank routing account information, we input it into TaxSlayer, and when we transmit it, then the IRS is able to handle pulling that from their account. If someone came in on the first day, January the 23rd, and they owe, they can select all the way up until April 18th to have those funds withdrawn. So they do not have to have it come out of their account the day that we're processing the tax return. They're able to select all the way up until the tax return due date, which is April 18th. Credit card. If they want to pay by credit card or debit card, that means they're going onto the irs.gov and clicking on their Pay tab. I tell people typically that will probably be the last resort, just because there are fees that apply with that, just for the payment processor. IRS is not charging the fee. There is the payment processor companies that have to facilitate taking those debit card, credit card payments. The EFTPS system, I don't think most of our clients use it, but that is a system that a taxpayer would have to set up in order to transmit their payments. Then there's the IRS Direct Pay. That is on the irs.gov website on the Pay tab. That means the tax client, the taxpayer is putting in their own bank information, routing account information through the IRS portal, and they would be keeping track of that information. All we're just letting them know, hey, if they want to pay whenever they can go and take care of that, again, on the irs.gov system. Then we have the installment agreement. Some people feel like based on their amount that they won't be able to pay it in full by the due date, April 18th. So they're going to sign up for a payment plan with the IRS, or maybe they already have one. Typically, the IRS takes this one. I believe if your balance is under, it's either $25,000 or $50,000. I can't remember right now. But they're going to take that and break that over 6 years to see what your monthly payment is on there. And then they can pick a payment date of anywhere from the 1st through the 28th. And once you break that payment over those 72 months, that's going to let you know this is the minimum amount that you need to pay on there for your payment plan. You can submit that through the IRS. You can actually mail your monthly payment in, or you can have the IRS take it from your bank account on there. So there are individuals that will have to set up a payment plan. I also recommend individuals, if they think they can pay their balance due within a few months, I tell them don't set up a payment plan. Just go ahead and mail those payments in. Just because most payments, the IRS, depending on your income, charges a fee to set up a payment plan. So I just try to find a way to work around it. But there are options for people to pay on there. And I just encourage individuals, as long as you're staying in communication with the IRS, then they will work with you.